This is Bloomberg Crypto, a daily Bloomberg iHeart podcast.
And I'm Philip Lagerkranser, senior crypto editor for Bloomberg News, in today for Stacey Marie Ishmael. It's Tuesday, December 6th. It's time to rebuild.
Guess what? It is the perfect time to
build and grow.
Time to build things.
Time to build up.
Taking the time to actually build.
A great opportunity to build.
You know what time it is?
Okay, it's time to build. It's time to put our heads down in a down market and really, make projects that will last for the long term.
Well, that's a catchy phrase that's often used by the crypto industry folks after they've had a massive implosion, like the one we just had, in which crypto exchange FTX filed for bankruptcy after withdrawals were stopped, and the company's very well-known CEO, Sam Bankman-Fried, resigned. Now, here's the problem. There have been many times to rebuild this year. We've had many implosions this year. And so, the skeptic could be forgiven for asking exactly what are we going to rebuild? Well, here to help me answer that question today is Bloomberg crypto blogger Emily Nicolle.
I guess in crypto, the thing to be wary of is people flashing about the money and saying we have this much around to invest in companies, or we're going to save that one, we're going to save that one, and actually that not happening in the end.
So we keep hearing this phrase again, the refrain of it's time to build or it's time to rebuild, whichever you prefer. But the question is, build what exactly?
It's often the phrase that you hear in crypto, right? Like it's always like when you get into the doldrums of the market, it's the time that crypto should be focusing on rebuilding itself, but also coming up with the most innovative new things that will lead the next bull market. So it was often said at the beginning of this year that, for example, some of crypto's biggest companies were founded in the last bear market. And it's what even some of the sector's largest venture capitalists like Andreessen Horowitz are very big proponents of. They talk about things like hype cycles, and they show fancy looking diagrams where they say like we're in our fourth or fifth hype cycle. I think we are now for crypto. And so like it's in these moments where crypto seems to be beaten down that actually it's where, at least as investors, they can see projects that might be the biggest giants for the next one. And so I guess there's both a means of trying to keep the industry alive, but also trying to keep morale going. That's why we hear this phrase repeated so often.
It reminds me a little bit of like almost 20 years ago. You had the, dot-com mania that gave way to this ginormous bust in 2001, 2002.
Is this 2000 for tech and crypto?
I mean, for some sectors of the tech market, absolutely. It's 100% a bubble that's bursting.
And then you get companies like Facebook, Twitter. Is that what they're going for? Is that the kind of movement that the Andreessen Horowitzes see here, a repeat of that pattern, where this is where the really good companies get built, when, not just anybody can get money, but only the best, kind of the weeds get separated from the chaff, if you will.
Yeah, I think they probably wouldn't like to say that this bear market is like the .com like boom and bust, in that I doubt they'd want to admit just how many companies might go under in this period. And a lot of this initial like buzz around time to build was happening at the very beginning, when we were just seeing prices falling but fewer bankruptcies. But in trying to kind of pinpoint the next big bet, this is obviously the best time for investors to be really thinking about due diligence and making investment decisions that are more predicated on, what is the potential revenue of this product? What is the potential profit of this product? Rather than moonshot bets where you're just like, oh, well, I'll stick a couple $100,000 in this thing and see what happens. And if I lose it, I lose it. It's fine. That's the mentality that you see during a bull market.
So if we're operating on the assumption that not a hell of a lot of crypto projects are hugely profitable right now, so the money, where is it coming from? Is it VC? Is it elsewhere? What are the VCs doing?
Well, investment in products so far this year has been falling quite a lot. I think this year in particular is the first year where we're seeing VC get truly burned by the crypto investments they've made. Probably in previous years, they didn't have as much exposure and they were still thinking about segments like tech and engineering and, I don't know, like investing in the next Robinhood or Airbnb. And so there's obviously going to be a lot more caution now around how they can really value the investments that they make. In the last few months or so, we've seen VC investment in crypto really, really plummet. Only several segments are really kind of holding up in that respect, like blockchain gaming. And my thesis on that is just because those are segments that are more consumer focused, consumer facing. And so you don't necessarily have to be convincing a gamer on their Xbox that the blockchain under this is really going to change the way they do something. And you have to go through all these weird technical loopholes to get to the product and make that business successful compared to if you're trying to sell them like a DeFi lending platform.
Yeah. Well, I want to come back to the sort of the taking the VC perspective. So if I'm Sequoia, I just wrote off more than $200 million worth of FTX investment. I mean, these are the people, these are the smartest people in the room, supposedly. I mean, if I am Sequoia and I got burned to that extent, surely you have to be thinking, I am going to put so much due diligence into my next bet. What do you think is going through their minds right now as they look on this space? Yes, there are probably bargains to be had, but you really want to make sure that you got it right this time, wouldn't you?
Yeah, we've definitely even been seeing this before companies like FTX have collapsed. So, for example, in the UK, there's a really big crypto technology company called Copper, which develops systems for those seeking to do trading in crypto. So they deal more with the institutions than anybody in retail. But even for them, they started raising their latest funding round late last year. So even when the bull market was still alive, and they didn't really close any funding until partway through this year. And the reason being for that is that investors wanted more due diligence done. They wanted to be more sure about the company they were investing in. And even now, when we hear the horror stories about some of the companies that did go bust and the kinds of due diligence they gave to their investors, like one big hedge fund who just gave their investors a single piece of paper with a line on saying, we have X amount of money. That's all you need to know. These are the kinds of like horror stories that VCs are now trying to avoid, and particularly with FTX being an industry darling in the way it was, it's definitely a lesson learned. But that's not to say there's not still money out there. A lot of these VCs have now raised funds that are specifically to invest in crypto.
Like Andreessen Horowitz.
Yeah, Andreessen Horowitz, Paradigm. These are all funds that have billions of dollars of capital ready to deploy just for crypto investments. And so to a certain extent, yes, they'll be more careful about how they do it. Maybe the pace of investing will slow, but the money is still there and still needs to be spent somehow. And so that's why we'll still continue to see at least some form of industry going forward.
The original vision here was, hey, we're going to build a more fair and transparent alternative financial system for the little guy. And then you look at this year. Crypto lenders getting wiped out, FTX getting wiped out, people with tons of money on these platforms, frozen, locked in. Are we then walking away from that? Or is that just kind of like put on hold for now? Where do you see that going?
There's obviously still a little bit of development happening in the realm of crypto wanting to become the next banking system or payment system, because there are still very large companies whose sole ethos is to make that happen. If we think about companies like Circle, for example, which issues the USDC stablecoin, that's a company that is very clear in its dreams and wants to be, not necessarily a bank, but a payment rail that everybody can rely on and use their token the same way you might spend just with like contactless payments in a shop. But just because those are in existence doesn't mean that the mission is going smoothly and is even going to go any faster. And particularly now that we have regulators coming on the scene and taking even harsher looks than we thought were. I mean, we thought we were looking pretty clearly at crypto before, and now it's even more intense. it's going to be even tougher for a company to convince the SEC or the CFTC or the Federal Reserve that these are products that they should allow within their regulated sphere.
And then you have Neil Kashkari from the Fed, the New York Fed, with his tweet on Friday. Basically, crypto is pointless. When you hear that from a Fed official, I'm guessing, my thinking is, you're not going to, again, these are pretty strong statements. There is no point in this, basically, is what he said. It has failed all the functions that it was supposed to serve, it has failed in. If you're a bank, again, what are you thinking?
Yeah, I think in this time in particular, what we hear from regulators most often is that crypto itself has proven that it has very little intrinsic value. And so therefore it should be treated as the speculative asset that it is, and you should be prepared to lose all your money. But there is still this idea that perhaps blockchain technology, distributed ledger technology, has some kind of benefit for banks in future. That depends on where you are. So for example, in the UK, we have a very good faster payment system. And so the appeal of something like instant payments with blockchain doesn't necessarily work out for us because we already have that. But in the US, where banking systems are quite slow, they take a lot of time, there has to be a lot of intermediaries, that's still a massive sell. And that might be why we see in the coming months and years, a lot more attention on things like central bank digital currencies, where the Fed can access all the benefits of blockchain, but control it all within itself. Unfortunately, though, the track record of the Fed is to do everything very slowly, so who knows when they'll actually arrive.
We'll be right back with Emily Nicolle for more on the crypto rebuilding process. All right, then. So let's turn to the 800-pound gorilla in the arena, Binance, or rather, their CEO. What are they, or what is he? What is CZ? What is he up to?
He's up to quite a lot at the minute, actually. By the time this podcast episode comes out, who knows whether what I'll say will be outdated. But from what we've heard from him so far, he's fast becoming the savior of the industry, or at least that's how Binance is positioning itself. There is potentially a rescue fund on its way for crypto projects that are ailing.
CZ, you've talked about launching a crypto recovery fund. Where are you on that?
There's been back and forth on how to structure that. Do we make that a loose fund, or do we make it an actual fund? I think we're kind of going with a loose approach where different industry players will just contribute as they wish.
We've also reported at Bloomberg that Binance was in discussions, at least, for helping out Genesis with its $1 billion loan that it's after. Not yet clear whether Binance will actually participate in that. But in all areas, it seems Binance is keen to portray itself as the one exchange that is healthy, the one exchange that is still there for investors, and the one exchange with all the money to foot the bill for things like this. And we warned this about actually FTX back in the summer and all the investments that Sam Bankman-Fried was making. The problem is when you have one company that is becoming that lender of last resort type of investor, the anti-competitive behavior in that is quite striking. You might end up having a real true monopoly on your hands, especially in an industry where there is no regulation at present, and so there is nobody to step in and say, no, you can't do that, sorry.
Yeah, and so now, like, the biggest player, the giant player in this industry becomes essentially the gatekeeper, if you will. Although CZ has been trying to, I guess, strike that balance between centralization and decentralization. But his pitch is also, to what you were speaking about before, his pitch was also this idea of, hey, there are a lot of small, promising projects plodding away out there. We might not know who they are, but they're good. And they have sound technology. They're just short of cash. Is that sort of like, is that a reasonable proposition right now? I guess it is, with VCs kind of being a little bit stingy.
Yeah, obviously I wouldn't profess to know much about how much due diligence Binance does on its investments. And he did make it very clear that the kinds of companies that he would be willing to back through this rescue fund would be ones that are, for example, profitable, which should mean that they should already have some kind of provable business model, which is actually something that's quite difficult to achieve in crypto sometimes. But the main issue with if that does push ahead is that if Binance then ends up being the one that holds all the cards, does that mean that Binance holds a monopoly not just over, where investors are trading as an exchange, but also in the technology that might be underpinning everything else? And additionally, on top of that as well, a lot of these times we've seen Binance and others come out and say, yes, we're going to invest in this company, we're going to save that one. And then a few days later, like we saw with the FTX, the deal falls away, nothing happens. And I guess in crypto, the thing to be wary of is people flashing about the money and saying, we have this much around to invest in companies, or we're going to save that one, we're going to save that one. And actually that not happening in the end. But now it's all about trying to build things that can either make those more palatable to a general audience, so improving the user experience, making it more easy to have a crypto wallet, for example, or it's things about just trying to use crypto incentives, crypto technology, blockchain, etc., as underlying layers to improve general appetite products. So, maybe we'll see something like an Airbnb on the blockchain one day.
That would be fun.
I'm not really sure there's a use for it, but that's the goal.
Well, I guess the if there is one thing that history teaches us is these, as we talked about in the start of this conversation, you never know at time zero. I guess that's where we are. We're sort of, it feels like we're at time zero now, where the industry is doing its best to wipe itself out, and we're in this. We don't know what it's going to look like, but there might be something. We didn't know in 2002 that there was going to be appetite for something like social media, for instance. And we might just not have guessed at what the application or the real killer application is here. Is that fair to say?
Yeah, but then if we think back to what I was saying earlier about how VCs have less of an appetite now for moonshot bets, that is the problem, I guess. In order to be able to predict what it is that might be the next version of social media, you have to have a fairly high risk tolerance for making bets that may not pan out. And if anything, actually, even if we look outside of crypto and look at Facebook changing its name to Meta and all the investment that they've put into the metaverse so far, it has yet to pay off. I mean, they warned shareholders of that. They said that we don't expect this to really be something that you'll actually see any profit from for several years.
Yeah, I don't see myself hanging out in the metaverse just yet. But we can sort of finish at that thought. Web 2 started with Facebook. Will Web 3 start with Meta? And I think that is a topic for another time. But I guess the future will tell, and we're going to be here to cover it, aren't we, Emily?
Indeed.
Thank you.
Thanks.
You can find more of Emily Nicolle's reporting on the Bloomberg terminal and on Bloomberg.com. For more, be sure to check out our twice-weekly newsletter, Bloomberg Crypto.
This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.